Hello, very good morning to all, and welcome to today's Daily Dose. I'm Kelvin here. Very good morning, happy Friday. Today will be the 13th of September 2024. Very good morning to all. So before we jump straight into today's gist of Daily Dose, let's have a quick look at the disclaimer first. All right, leverage trading carries a high degree of risk and may not be suitable for everyone. Losses can exceed deposits. This presentation is not an offer or solicitation to buy or sell, nor financial advice or recommendation for any investment product. As well as any forecast, prediction, or projection in this presentation is not necessarily indicative of the future or likely performance of the product. This advertisement has not been reviewed by the Monetary Authority of Singapore. All right, so as usual, the first point or the first we call it a segment in our daily dose will be a highlight of what has taken shape yesterday in terms of the respective important news event, economic data release, and their impact on their respective broad-based cross asset price action, I would say. Then followed by a more longer term, I mean, i.e. medium term horizon, I would say multi-week to multi-month of a particular fundamental and intermarket dynamics now share with you all, impacting a respective asset class. Okay, then thereafter will be the short-term intraday technical outlook on those various broad-based cross asset classes that we do on a regular basis. And lastly will be a sum up of what are the events in terms of economic data release to take note of for today and as well as over the weekend. All right, so now let us now have a key recap of what has taken shape yesterday first. All right, so yesterday in terms of the FX market, there was actually an important event, which is the ECB meeting. So the ECB meeting, we in market expectation, they actually cut rates. So that don't actually gel out a very big surprise to the market. So they cut rate as expected by 25 basis point. All right, to reduce the main refinancing to 3.7 to 3.5% from 3.75% as widely expected. So market now are actually looking for at least one more cut before 2024 ends. So it's either in October or December. So now what's interesting over here is that during the press conference, Lagarde didn't commit to any specific cost for borrowing costs, specific cost for borrowing costs. That means she didn't give a very clear guidance that what will ECB be doing next. All right, but based on what the latest economic data release over here, okay, so ECB actually every 3 months they will release their latest so-called forecast, growth forecast and inflation forecast. So what they did over here is that let's look at the growth forecast. All right, so the one you see on my screen in black was the previous June forecast. The one in pink was the latest forecast released yesterday. So throughout from medium term to long term, that means for the year of 2024, 2025 and 2026, end of year GDP forecast has been reduced slightly lower. All right, so for 2024, it was being revised downwards by 1 basis point to 0.8% from 0.9% that was previously forecasted in June. So that's for the 2024 GDP Eurozone forecast. In 2025, GDP Eurozone forecast has been revised down by 1 basis point as well, 1.4% to 1.3%. Very similar to 2026, 1.6% to 1.5%. So what ECB is actually concerned is there could be a potential growth slowdown going forward. All right, but what they do over here, very interestingly, they hedge their bets against what market is expecting them to be ultra dovish by slightly revising upwards inflationary forecasts in Eurozone across the calendar from 2024, 2025 to 26 by 1 basis point, increased by 1 basis point. So initially, at the end of 2024, they're expecting inflation excluding food and energy in Eurozone to slightly tick upwards to 2.9% from 2.8% that was previously forecasted in June, and in 2025 as well to 2.3% from 2.2 previously projected. 2026, no change at at 2%. So they're expecting the Eurozone forecast inflationary trend to slowly tick downwards to 2% by the end of 2026. So that actually causes the euro dollar to strengthen instead of weaken. All right, but that also came in within our market expectation. So for those who actually follow our daily dose of market insights, at midweek we flip to our intraday bullish bias on the euro dollar, holding above the key support at the 110 figure level, which indeed the euro actually rises. So what we could see over here is that across the board, the dollar actually weakened because of the strength in the euro dollar yesterday. All right, and what's importantly over here is that the dollar also weakened dramatically against the dollar yen and the dollar Aussie. So recall that for the dollar yen, we did mention that yesterday we also have a intraday bearish bias on the dollar yen because it's shaping a bearish element of a bearish flag, and the key downside acceleration was the breakdown below the 142 figure level. So it indeed break down during today's early Asia session. Once broken, you will see that tremendous deceleration downwards. All right, so that is indeed a key technical level that we highlighted yesterday in our daily dose. So you could see over here is that technical and fundamental event are confluencing one another. All right, so yesterday, why the dollar actually weakened? Because East Euro strengthened right after ECB. This euro dollar strengthened after ECB after the latest forecast from ECB slightly tilt upwards the inflation forecast slightly higher for this year and next year. All right, and also during the press conference, Governor Lagarde refused to commit herself for another interest rate cut going forward in October, despite market is pricing in at least another cut before 2024 ends. So that's caused the dollar to weaken, euro to strengthen, and we see the dollar sell off across the board. Then thereafter, you followed by the dollar yen in today's Asia session, breaking below 142 figure level, further implying a negative feedback loop into the US dollar. Okay, so that's for the dollar story. And over here on the stock market, over here is that in the US stock market, we do see a very strong performance across the three or the four major indices. The top performer being the Nasdaq 100 up 0.97%, further be kind of supported by these mega cap technology stocks. The Dow Jones Industrial Average lagged slightly behind 0.6%. Then thereafter, followed by the SPX up 0.75%, and in fact, the top performer was the Russell 2000 up 1.22%. So if you look at the heat map of the S&P 500 over here, we see very strong performance in Google, Meta, as well as Nvidia, both of them inching up. Three of them up respectively 2.2%, 2.7%, and Nvidia up 1.9%. So later I will touch on the intraday technical outlook chart of the Nasdaq 100 and the S&P 500, and I'm still not so convinced of this push up yesterday on the Nasdaq 100. Why? Because there are several technical elements that are still could face a hurdle for the Nasdaq 100, especially we see this tremendous 4 days of rally in the Nasdaq 100 driven by Nvidia since the start of this Monday. All right, and also very interestingly, gold managed to actually surge fresh all-time high yesterday. And those who follow our daily dose of market insights for gold, so for example, gold price over here. Okay, one share we are for gold. Yeah, very quickly, this is the 1 month rolling performance of gold versus other currency. So gold now is strengthening the most dramatically against the dollar. All right, and those who follow our daily dose of market insights, some of you may say that gold is toppish, but I highlight several positive technical elements, and potentially there could be a break of that current fresh all-time high at 2,532 level, which indeed it broken yesterday and shaped another fresh all-time high, and now it's quoting at 2,565. So what are the key levels to watch next on spot gold XAU/USD? This I will cover later in the short-term intraday technical outlook. All right, and also in today's Asia session, we see a spike up in the China stock indices. That means the China benchmark index over here. Okay, not it actually came back down again, but managed to see some positive performance spreading over to the proxy. The Hang Seng Index that is up 1.2%, the Hang Seng Tech that is up 0.9%, and the HSCI, the H shares listed on the Hong Kong Stock Exchange, is up 1.17%. So the key catalyst of today's morning push up in the Hang Seng indices has been driven by this positive news flow from China. There could be a possibility that China's central bank may cut rates related to mortgages on 5 trillion mortgage as soon as September. This before the end of this month. All right. So that could potentially spur household consumption. All right. Despite the fact that it could hurt the bank profitability because the net interest margin income get lesser. But right now, I do perhaps the top China policymaker right now is a bit uneasy because we have only about 5 more weeks, not 5 months, okay, around 3 more months left to go before 2024 ends. And given that we know that there's a slew of very weak China data releases this week, weak import numbers, very weak core inflation data, weak ISM, weak manufacturing PMI data, and as well as services PMI data from China, all pointing to a low probability of China top maker achieving their 5% 2024 GDP target. All right, and with 3 more months left to go before 2024 ends, potentially there could be much more policy stimulus coming up. And one thing that is potentially reported by Bloomberg yesterday after the close of the Asia session is that Bank of China, PBOC, the China Central Bank, may cut rates pertaining to mortgages as soon as this month. So that causes a spike up in the Hang Seng indices at the start of today's Asia session. So later I'll highlight to you all in the daily dose, in today's daily dose, the intraday technical outlook to look out for on the Hang Seng Index. All right, so that actually sum up today's key news event and its impact on the respective cross asset classes. All right, so now let us now touch on more on the fundamental and the intermarket dynamics for one of the major cross asset classes, which is gold. So a lot of people have been concerned that since gold has really hit a fresh all-time high, is this particular all-time high sustainable, or is a fake bullish breakout in gold, fake bullish breakout in gold XAU/USD. So before that, let me touch on this chart of gold first. The just now the earlier chart that I flashed out, which is the 1 month rolling performance of gold versus other currency as of today. That means 1 month rolling performance. So it's a medium term trend over here. So for sure, gold is the strongest now as quoted against the dollar, followed by the CNH, followed by the Canada dollar, followed by Euro, Swiss franc. But what's interesting over here is that gold against Japanese yen is not picking up in line with the rest of the other currency. Then instead of gold versus Japanese yen ticking upwards, it's now trading downwards at negative 0.56%. So what we could see over here is that if we price gold according to other hard currency, like the dollar, the CNH, the Canada dollar, but gold is not appreciating as fast against the yen. In fact, now it's showing negative 0.55% when gold is being quoted against the Japanese yen. So what you see over here right now is there are some signs of market participants that is pretty much concerned about growth and as well as the carry trade. All right, so right now what you could see over here is that it actually also further supports further strengthening of the Japanese yen, not even against the other fiat currency or also against gold as well. That means yen is strengthening against gold. So what is telling us that number one, there is no longer be very attractive using yen as a funding currency to even long gold right now. All right, so that means potentially it also further supports a further strengthening against the yen, not even against the FX in the FX market, but against hard asset classes like gold. Okay, something to look out for. Another thing I want to share with you on the intermarket perspective is this particular chart over here, where we start to see the very clear bearish breakdown of the 10-year treasury real yield. That means real opportunity cost of holding gold. So very clearly, there's a bearish breakdown below the 1.62% former major support of this 10-year US Treasury real yield. That means the next support level to watch out for, this is the daily chart. That means representing a medium term time horizon, multi-week to multi-month, the next trajectory on the 10-year real treasury real yield is more pointing inching downwards towards the next support level at 1.38% after the recent bearish breakdown this week of 1.62%. Okay, so indicating to us that gold price when quoted in dollar XAU/USD still has further potential upside to go. Why? Because there is lower real opportunity cost right now for holding gold because of the bearish breakdown in the 10-year US Treasury real yield. And you realize that since 24th of July, ever since that gold managed to hold on above the 50-day moving average, and as long as this 10-year US Treasury real yield is keep inching downwards, gold prices keep hovering upwards, keep trading upwards, indicator which represent that you know that gold itself is a non-income bearing asset. That means anyone who hold gold on the long term, that means long gold, there is zero interest coupon. That means there's no dividend at all for gold. So gold, in order to benefit gold, is we need to see capital appreciation in gold. So to do that, we need to see a reduction in real opportunity cost for holding gold. One thing to look at will be the 10-year US Treasury real yield. Then why do you use 10-year? Because 10-year is a more longer term horizon, representing a longer term trend in gold. Right. So this is one of the intermarket dynamics that I share with you all that is supporting gold prices right now. Okay, XAU/USD. Okay, so reducing the odds indicate to us that yesterday bullish breakout is a failure breakout. All right. So now with that, that sum up the fundamental and intermarket dynamics that I share with you all on this particular asset class for today, which is gold, XAU/USD. So with that, now let us now turn our attention to the intraday technical outlook on the various broad-based cross asset classes. Okay, so with that, let me expand my screen so that you guys could see the key levels. Okay, so I think everything is fine on the screen. Okay, good. So now let us now turn our attention to the FX market first, starting with the euro dollar. So for those who follow our daily dose, this chart shouldn't be a particular of a surprise to you guys. Yesterday, we do have a key short-term pivotal support at 110. Price action went up and hit our first resistance at 1.1089 yesterday, and now it's trading sideways during the Asia session. All right. So RSI, yes, overbought, but there's no bearish divergence, so potentially hinting a signs of a minor pullback. So since it's Friday, right, I will have a tightened key short-term pivotal support for today at yesterday's former minor swing high of this high of 10th of September and 11th of September now turns into a pullback support level, which is 110.50. And if you look at yesterday's dramatic rally from the yesterday's low all the way up to today's Asia session high, okay, that's also confluence with the 50% Fibo retracement as well. Okay, oops, sorry. So now using this Titan key short-term pivotals with support level at 110.50 on the euro dollar. Okay, that's again euro dollar. We will still maintain that short-term intraday bullish bias above 110.89 may expose last Friday non-farm payroll minor swing high area at 111.40. Only a breakdown with an hourly close below 110.50 will negate today's intraday bullish bias to revisit the 110 support level again. So that's for the euro dollar. Very similarly on the sterling dollar as well, where price action hit our resistance at 131.10, 131.40 level in today's Asia session. Same thing, the hourly, and right now is clearing above the 20-day moving average, much more bullish than the euro dollar, because the euro dollar now is still testing its 20-day moving averages. All right, 20-day moving average at this juncture while we are speaking. Whereas for the sterling dollar, it clearly surpassed this level. All right. So with that, firstly, let's look at RSI. RSI, yes, overbought, but there's no bearish divergence, so indicating only a chance of a minor pullback. So potentially the first pullback level to watch out for could be around the 20-day moving average, around this level here at 131 figure level, but I will do a slightly lower short-term pivotal support for today. Tighten it from the 30-10 level that we have using 130.70 as my short-term pivotal support. Also the 50% Fibo retracement of yesterday's of this rally starting in Friday on Wednesday. Okay, somewhere around 50% FIBO retracement. Okay, so as long as the minor pullback didn't break below 130.70 tighten short-term pivotal support for today on the sterling dollar, we will still maintain a intraday bullish bias on the sterling dollar. Next near-term resistance level to watch will be 132.20 for today. That is the minor swing high area of last Friday, exposed non-farm payroll data. A breakout above 122.20, given that it has a better positive momentum over the euro dollar, it could potentially see a retest on 28th of August minor swing high at 132.65. All right. However, if price action starts to break down below 130.70, then today's intraday bullish bias will be invalidated to see a retest of the 130.40 slash 130.10 support zone next. Only a breakdown below 130.10 may see the what I call it, a triggering of a fresh minor corrective decline scenario to revisit 129.40, which corresponding to the rising 50-day moving average as well. All right, so that sum up the technical outlook on the short-term intraday technical outlook on the European currency against the dollar. Now, turning our attention next will be the Aussie dollar. So the Aussie dollar, within our expectation, continue to push up above the 66.40, 66.20 level. That's our short-term pivotal support that we have yesterday, hitting our resistance at 67.10, 67.20 level over here. So with that, and it's also now testing the 20-day moving average, acting as a resistance level as well. So given that the RSI has already gone to the overbought level, but there's no bearish divergence, so potentially there could be some form of a minor pullback. So since it's Friday, I will use this particular support zone over here, very clear intermediate support zone. And if you do the FIBO retracement of the entire up move from the low of Wednesday all the way to today's Asia session high, that also correspond closely to the 50% and the 61% golden ratio as well. Okay, so using this Titan key short-term pivotal support for today, 66.90 slash 66.70 on the Aussie dollar. As long as the minor pullback didn't surpass below 66.70, we will still maintain an intraday bullish bias on the Aussie dollar. Next resistance level to watch will be the non-farm payroll, exposed non-farm payroll minus swing high at 67.60. A breakout above it may revisit 67.95, which is the minus swing high area of 3rd of September. And if we do the FIBO retracement of that previous slide from 29th of August all the way down to this Wednesday minor low, that correspond quite closely to the 76.4 FIBO retracement level. However, if price action starts to break down below 66.70, then today's intraday bullish bias will be invalidated to revisit 66.40 slash 66.20, with also confluence with the 200-day moving average acting as a support level as well. So that's for the Aussie dollar. And now quickly, let's have a look at the dollar yen. Still recall that dollar yen, why we were bullish yesterday despite the push up, because price action is trading a bearish flag formation. And I did recall that, still remember that the 140 downside trigger level, when this level is being taken up, potentially price action could accelerate on the downside, which indeed it takes shape. And now it's coming very close to our support level at 140.25 that we highlighted yesterday. So with that, I will have a Titan key short-term pivotal support for today at yesterday's, because it's quite volatile, I don't want to put it so tight at this 141 or 142 level. So 142 level or 142 figure level could be our first intermediate resistance to watch, but the key short-term pivotal resistance for today will be at 143 figure level. That was yesterday's minor swing high that they can't surpass on the upside and shape that bearish reversal. So using this tipping point here, this new tipping point as my Titan key short-term pivotal resistance for today, 143 level, figure level, still maintain that intraday bearish bias on the dollar yen. A breakdown below 140.25 exposes 139 slash 138.75 next. Only an hourly close above 143 figure level will invalidate today's intraday bearish bias on the dollar yen to see a mean reversion rebound scenario taking shape towards 143.70 and potentially even 144.65, which is the 20-day moving average now acting as a resistance level as well. Okay, so that's the outlook for the dollar yen, and also sum up our intraday technical outlook on the major FX pairs against the dollar. So now turning our attention next will be the Asia Pacific stock indices. First will be the Hang Seng Index or the Hong Kong 33. Still recall that Hong Kong 33 yesterday we were neutral between 17,330 and 16,960. Now price action has burst up and hit the resistance level after the neutrality zone, the upper neutrality zone at 17,330. So now price action already hit the resistance zone at 17,500 / 17,595. And this level, if we were to look at it from a perspective, if it confluence with several key inflections level, firstly, it's the 50% Fibo retracement, and as well as the 20-day and the 50-day moving average acting as a resistance zone as well. All right, over here, the dark blue line and the red line. Okay, so given the fact that it has come into we call it a confluence with this key inflection zone level, coupled with the RSI now inching downwards from the overbought level, potentially there could be a pullback in first step towards 17,330. So with that, on the intraday basis, we will flip to a bearish bias for this potential pullback using 17,500 / 17,595 as my short-term pivotal resistance. First support level to watch will be at 17,330. Only a breakdown below 17,330 will see a deeper pullback to retest the 200-day moving average, acting as a support level at also confluencing with the yesterday's minor swing low area at 17,140 next. Only an hourly close back above 17,595 will see the extension of this rebound and invalidate today's intraday bearish bias for that minor pullback scenario to unfold to see a squeeze up towards the next near-term resistance at 17,730 and potentially even 17,930 next. So that's the outlook on the Hong Kong 33, i.e. the Hang Seng Index for today. Now, next will be the Japan 225. Still recall that Japan 225, we flip to a bearish bias. Why? Because price action is hovering right below the 37,170 short-term pivotal resistance that we highlighted yesterday. Indeed shaped that bearish bias together in line with the sell-off that was seen in the dollar yen as well. And what's interesting here after shaping that higher high, right below the short-term pivotal resistance that we highlighted yesterday, 37,170. Momentum also kind of confirm or reinforce this downward movement by that bearish divergence that was flashed out in the hourly RSI slightly below the overbought level, shaping instead a lower high over here. And given that the RSI now has inched down back below the 50 level mark, supporting further intraday downside momentum, we will still maintain that intraday bearish bias on this Nikkei 225 or Japan 225. First support level to watch will be at 37,195 using no change the 37,170 as my short-term pivotal resistance to maintain this intraday bearish bias. A breakdown below 36,195 will expose the next near-term support zone, which is this week minor swing low area at 35,400 / 35,115. Only an hourly close back above 37,170 will invalidate today's intraday bearish bias to see the continuation of this rebound, mean reversion rebound scenario towards the next resistance zone at 37,570 / 37,880, which confluence with the 50-day and the 200-day moving average acting as a resistance as well. So that's for the Japan 225. Moving on will be the German 30 or the German DAX, which is one of the major European stock index. No change, still going to play around the 20-day moving average, can't have a clear breakout above it, and right below the 18,660 short-term pivotal resistance that we highlighted yesterday. And right now, the RSI, despite not having coming close to overbought level, but it start to shape a bearish divergence as well. Okay, shaping lower high, but price action going to go higher high yesterday. So with that, no change, still using the 18,660 as my short-term pivotal resistance level. Still maintain that short-term intraday bearish bias. Now I have a first support level to watch out for today on the intraday basis will be the 18,000. Let me put it in writing, 390 level. Okay, so that's the first support level to watch, not first resistance, first support level to watch. 18,390. Only a breakdown below 18,390 may expose the next near-term support level at 18,160. All right, so still maintaining that intraday bearish bias. But however, if price action starts to break up above the 18,660 with an hourly close above it, then this intraday bearish bias will be invalidated to see the exposure of the next near-term resistance level to come in at 18,820. Okay, so that's for the German 30. Now, turning our attention, next will be the US Wall Street 30, i.e. the Dow Jones Industrial Average. So the Dow Jones Industrial Average continues to hit the upper limit of our neutrality zone that we highlighted yesterday, 41,040/41,200 level. So with that, since it's still within the neutrality zone, you can't break out above it, we will still maintain a neutrality stance. But now on the lower boundary, we have a tighter, higher neutrality zone, which is confluencing very closely to yesterday's minor swing low at 40,620. So still maintain that neutral bias between the US Wall Street 30 at 41,040/200 level, 41. Okay, so in fact is this, let me remove this level. Okay, put it more precise. Okay, 41,200 and 40,620. Only a clear breakout above 41,200, then we could validate a further potential impulsive up move to retest the minor swing high area of 30th of August and 2nd of September at 41,535 next. So that's for the US Wall Street 30. The Nasdaq 100. All right. So before we touch about the Nasdaq 100, we know that the Nasdaq 100 movement has been pretty much influenced by Nvidia. So let's take a look at Nvidia price action. We know that Nvidia price action has been shaping that 4-day of rally in line with what we see on the Nasdaq 100 as well. But what's interesting in Nvidia right now is coming very close to the first resistance level, at this 123.40 130 figure level. And yesterday price action has formed a kind of a very small bearish spinning top candlestick. That means a candlestick, a very small body, after the strong push up that was seen on Wednesday. So giving us a kind of indication that is now playing close to the resistance at this 123 figure level, and also at the 20-day moving average, very close to the 50-day moving average as well, both confluencing as a resistance level as well. But yesterday price action is not so I would say that encouraging in terms of positive follow through as compared to the long bullish Marabuzu candlestick seen on Wednesday. So indicating to us that there's some form of hesitation by the bulls at this juncture that could see a bit of consolidation, or even a potential reversal at this juncture, given the appearance of this small spinning top candlestick that has taken shape yesterday in Nvidia. So with that, with this price action on Nvidia, I will be not so convinced in terms of the price action on the Nasdaq 100, despite the fact that it cleared above the 50 and the 20-day moving average yesterday. The 9,302 level or 9,340 level was our short-term pivotal resistance yesterday. Initially, price reacted off our short-term pivotal resistance, but didn't have a kind of a negative follow-through and breakthrough above this level. And because of that not so encouraging price action in Nvidia, I'll be hesitant to actually be outright bullish on the Nasdaq 100 for today. So for today, I will have a neutrality stance instead on the Nasdaq 100, neutral between 9,630. So what is this 9,630? Very clearly, this was intermediate range resistance that has taken shape since 27th August that lead to that previous sell-off on Nasdaq 100 to give rise to the 18,320 support that was seen on last Friday exposed non-farm payroll data. So neutral between 9,630 and neutral between 9,320. So if price action starts to break down below 9,320, which is also indicating below the 50 and the 20-day moving average, then that could see yesterday's push up is a failure bullish breakout, and price action could actually start to come down and expose the near-term support level in first step at 19,090 at 18,900 for today. Okay, so turning into a neutrality stance on the Nasdaq 100 at 19,630/19,320. All right, so that sum up the intraday technical outlook on the major stock indices for today. Now, turning our attention to the commodities market over here, starting with gold XAU/USD. So for gold XAU/USD, for sure, it's clearly broken out above the range resistance of 2,532 that is in place since 20th of August. RSI now has really go into a very extreme overbought level, but there is no bullish divergence. So potentially there could be some form of a minor pullback taking shape. So pullback zone to look out for will be at 2,550, 2,545 that I highlighted over here. But the very clear key support level to watch out for will be this pullback area of that former 4-week of range resistance. Now turns into a very clear key pullback support level. And if you do the Fibo retracement of yesterday's rally from the low of Wednesday low all the way up to today's Asia intraday session high will be the 50% and the golden ratio of 61.8% as well, confluencing with the pullback level, okay, of that former range resistance. So using 2532/2526, as long as this minor pullback didn't surpass below this short-term short-term pivotal support level, we will still maintain a intraday bullish bias on gold XAU/USD. Next near-term resistance level to watch will be 2588/2595, 2600, 2606 in the first step. So if we do the Fibo retracement of this ongoing bullish impulsive up move over here, it confluence with the 2 times resistance as well at the 2006 level. Okay, so however, if price action starts to break down below 2005-6, then yesterday's bullish breakout will be in jeopardy, considered as a potential failure bullish breakout, and the next level to watch out for, the price could potentially slide back down to retest the 2500 level. A breakdown below it may expose 2473 next. So that's for gold XAU/USD. Still maintain that intraday bullish bias, but with a tightened key short-term pivotal support now at 2532/2526. Now turning our attention to West Texas crude oil. So West Texas crude oil yesterday broke above the 68.10 short-term pivotal resistance level that we have and continued to inch upwards. So what we could see right now is potentially we could be in the midst of a mean reversion rebound scenario to actually cover back this gap that was formed last week. Okay, this gap, we call it this tremendous fall in price action. So now it's actually looking at mean reversion rebound to go back up to retest the 20-day moving average that is acting as a resistance at the 72.20 level / 73.15 level, which is also this dotted gray line here. So what is dotted gray line? So this dotted gray line, if you go back to the daily chart, is the former major range resistance of this symmetrical triangle that I drew from the low of March 2023 now turns into a pullback support, which is also pullback resistance, pardon me, which is also confluencing with the 20-day moving average acting as a resistance level as well. And given yesterday's positive price action on the intraday basis, we will flip to an intraday bullish bias on West Texas crude oil for this potential mean reversion rebound to play out, using 68 level as my short-term pivotal support level. Next near-term resistance level to watch will be at 71.15, followed by 72.20/73.15 level on West Texas crude oil. Only a bearish breakdown below 68 figure level, that will be for hourly close below it, will invalidate today's intraday bullish bias. That means IE also invalidate the mean reversion rebound scenario to see a retest on this week swing low area at 65.94/65.10 level. Right, so that's the intraday technical outlook on West Texas oil, and also sum up the intraday technical outlook on the major cross asset classes. So before we go, let's take a look at the calendar. What are the key data to look out for today? So for today, during the European session will be pretty much quiet over here. Yes, we have one data to look out for will be the Eurozone industrial production for the month of July out at 5 p.m. Singapore time. And also in the US session, do pay close attention to this key growth related data, which is Michigan consumer sentiment flash data for the month of September. Market is expecting a slight uptick of 68. Okay, 68. So right now it's quoting at previous data was 67.9. So any data that is, because if you look at the trend of the University Michigan data, why this data is important? Because it represents consumer spending in US. It continues to show actually a downtrend since March level, all right, since March high of 79.4. So let's say if data continues to remain weak and come down below expectation around 66 or even 65 level, that's way below July print, that could create a bit of growth scare in the US economy. So we know that consumer sentiment represents consumer sentiment. It's consumer spending. So even is a leading indicator of consumer spending. So that could potentially see some form of weakness in the major US stock indices if the Michigan consumer sentiment data disappoint. So something to look out for at 10 p.m. Singapore time. And also at 10 p.m. Singapore time, I think ECB President Lagarde is speaking again, but I do not think that she will change much in terms of her tonality from yesterday's ECB press conference. And over the weekend, we do have some key China data to look out for that represent growth as well. Industrial production, for August, retail sale for August, and the unemployment rate for August, and the housing price index for August. So out at Saturday, 9:30 a.m. and 10 a.m. Singapore time. So this this price data point could impact the Hang Seng Index on Monday. All right. So that actually sum up today's daily dose of market insights. I'm Kelvin here, signing off, wishing you all a great and restful weekend. We shall speak again on next Monday. Thank you.